Yesterday in our stock talk, this is a Zoom call that we hold with our tribe members every Friday. I introduced them to a new allocation element of my cheat sheet. What I realized was, I had some stocks that were going to perform outstandingly, and they were going to duplicate the past performance of NVIDIA and Supermicro and Vertiv, all who were up over 100% and some 200% in the last year. But the likelihood of them doing that again is really slim and none. They'll probably sink back to an average rate of return of something in the neighborhood of 30 to 35%. So what I need to do to boost my portfolio above that 30 or 35% is find not so much the next NVIDIAs, that's probably not going to come for another decade, but instead those stocks that are not very highly priced, either as a result of being depressed, as a result of the slowdown in the semiconductor industry that was supplying the EV industry and the laptop and phone industry that has gone into a slump. Find them, and as they recover from their 60% loss, they'll recover substantially and maybe give me a 300% gain over the next 2.5 years, which will equal out something close to 100%. So that's what I'm trying to do on this reallocation. So what I've done is taken the 39 stocks that I have followed and researched and taken those out of my portfolio that aren't going to give me the performance, and then push that additional revenue or that additional investment towards those stocks who are going to give me the exponential return. On the sheet here, you'll see that over on the far third column from the right, that I show the average rate or the rate of return that I'll have from my cost basis, which is over here next to the ticker, what I'll make based on the projections that I've created, which is based on their PE ratio times their reported or projected earnings per share. That's all the price of a stock is. It makes up two elements. What is their earnings per share that year? And what is their PE ratio? Well, if you can find those two variables and get them with some level of accuracy, you can predict the price of a stock. And then if you do it on an annualized basis, you'll see which stock is going to perform extraordinarily well in 2024 as opposed to 2025, as opposed to 2026, and you move your money accordingly. And that's what this does. And what I've done is, you can see, I think the lowest return that I see on there is Apple over the next 2.5 years, giving me a 63% return. But you'll see that it's loaded, that 40% of it's going to come in 2024. So I need to reduce my holdings in Apple after they hit their 40% gain, or $249 per share, which is then equated to my cost basis of $178.14, and then move that money towards one of these green or yellow stocks, such as Applied Digital, which I project I'm going to get a 331% gain based on my cost basis over the same period of time. So my money will do me better in Applied Digital in 25 and 26 than it will in Apple. That's the whole logic behind this, to help my tribe members allocate their funds on a year-to-year basis where they're going to get the highest rate of return. And what I do then is sit in on the earnings calls of each of these stocks and other stocks that are key players in the industries that I'm interested in, and that's AI and semiconductors, and data centers. So with that in mind, they will tell me, inadvertently, they will tell me what the next big stock is going to be. To give you an example, I sat in on AEHR's earnings call, and about about halfway through it, the CEO went on about a 10-minute talk about how his testing equipment is very adaptable to the change that is going to be made in the wafers that he tests in the coming years, because they will be changed from pure silicone to silicone plus gallium nitrate. Well, what is gallium nitrate? Well, it's a combination of a derivative of copper and nitrogen that a small company holds the patent on. And I picked up the gallium nitrate. I did the research, and I knew who they were talking about at the time because I knew this problem existed. You got to understand, anytime something revolutionaries the world, there is a problem that is created with it as well, such as we saw the thrust in electric vehicles. That created a problem. What was that problem? Well, first of all, it was a lack of charging stations, and then it was also a shortage of lithium. So if you bought into the plug-in stations, and if you bought into lithium, you got exponential growth that was probably higher than you would have gotten if you had invested in Tesla and or NIO or any of the other electric companies. So that's what these green stocks are. And the one that I'm speaking of is Navitas. Navitas owns the patents for the gallium nitrate being introduced to the silicone wafers that AEHR CEO was telling me would be the standard in the future. So more than likely, Navitas is going to very greatly outperform NVIDIA, because NVIDIA has had its 100% gain, its 200% gain, and now it will settle back. But there are other stocks, as I say, that will surge. So I want to move my money towards them, and this cheat sheet edition gives me that. Now, as I introduced them to this, they said, well, Kerry, it's good because it's got your cost basis in it and your shares in it. How about if you would email us every week a copy of this and teach us how to use Excel spreadsheets so that we can alter the numbers to our portfolio. And if, in fact, we want to use your methodology, we want to add some other stocks using your methodology for our individual portfolio, could you do that for us? So Trent and I agreed that, yes, we can do that. Well, what more are you going to charge us for that? Or are you going to create a school, a course, and charge us for learning how to do that? And I said, no, I don't want to do that. I want to build a tribe of loyal people who will help my business grow, because I'm going to be buying some computers to help me spread this beyond the 29 stocks through the 6,500 that are available. And I need AI assistance to do that. That's going to cost me a lot of money. So I want them to share in that cost, but I don't want to raise the price above $60 a month, because I think I can make you $720 a year at a multiple of, I don't know, 10,000. I don't know. It all depends on how much money you have to invest into this, I think, obvious way to invest in the stock market. So that's what we're doing. We're identifying those stocks that are going to benefit from the AI revolution and grow into the machine learning revolution, but also solve the problems that NVIDIA, Google, Amazon, Meta create as they push this technology forward in these small companies that are selling for $4.77 today and will be $400 stocks within the next 3 years. Well, that's what we have to identify and then work together. It's just like the highest one on here is Iris. And I didn't know about that until a stock talk 2 weeks ago, when between Trent and another tribe member's conversation, it came to my attention. I did the research, and it is now one of my green stocks. one of the stocks that is going to give me in excess of 100% return over the next 2.5 years. So that's what this is all about. That's what picking stocks has become about. And it's made possible because of the massive amounts of data that are at my disposal, and I know where to go to find it, and then I know the questions to ask to get the decisions, which is a white stock, which is a yellow stock, which is a green stock, and more importantly, which is a brown stock. What is a brown stock? The ones I've thrown out. Or maybe you call it a violet stock. Those are the ones I don't even want to consider. Like General Motors and Ford and Procter & Gamble, those companies who are just trying to keep up with inflation, who are growing at 3% a year. If a stock isn't growing at 20% a year, it isn't going to double in 5 years. If it's growing consistently at 20%, growing its revenues and earnings at 20% a year, multiply 20 times 5, and that's 100. So it's going to take 5 years for it to grow to that level. Well, if it's growing at 50% earnings and revenues, well, it's only going to take 2 years for it to double. It's not that difficult. If you know where to find the information, if you can get somebody to teach you, and that's what my role is. I'm a teacher. I'm a creator. I'm also a stock picker. So if you want more of this, you need to come to Best of Us Investors and digest it and see if it's right for you and see if you believe that this can happen. We have right now a 14-day free trial. So that basically means you come in and you look at it for 14 days. You attend 2 of our Friday stock talks. You see what that's all about. You get on our Discord and you interchange with the other members of the tribe. We even have a live exchange on the Discord, and you see if this is the community you want to join. I compare it in my mind to a church. Is this the church? Is this the community? Is this the group that you want to associate with to help you become a better investor, to understand what data is and how you can access it to make sound investment decisions? I'm Kerry Grinkmeyer. I'm a retired financial advisor. I just want to help you make more money.